Hello friends, welcome to my YouTube channel Simply Stocks. And today I'm going to talk about some of the companies that are around 10,000 crore market cap or have dipped below that over the past couple of months. Very good small cap companies that are top brands but have corrected a lot from the top and looks very attractive from a 1 year to 2 year point of view, from around 18 months to 2 year point of view. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about these companies, let me tell you about the criteria. These are established brands and strong managements, diversified yet market leaders in their own space, have low debt and no pledging. They have strong institutional holding. People have sold off, so there are FIIs that have sold off in these companies, and that's why they have fallen between 20 to 80% as solid return ratios and numbers that they are producing. The first in this list is Blue Star. Now, Blue Star is a leading AC provider, and although Voltas do look a better company comparatively, but the numbers recently that have come out in the March quarter as well as in the December quarter, Blue Star's numbers were much better, and it looks more attractively priced at around 52 times current earnings. Normally, these companies trade at 70 to 80 times, and they have a high demand. A very good white goods companies with a number of products that they are selling. They are leader in AC segments, especially commercial AC segments and refrigeration. Those commercial refrigerators are also big with the companies, and the brand is recognized across India. And the shutdown and the kind of economic shutdown that we saw in 2020 and 21 meant that FY21 was completely washed out, and even parts of FY22, even summer of FY22 was washed out. So FY22 wasn't that great either. I think from FY23 onwards, numbers will be very strong. It is a better electrical infra will only drive growth going forward, and I think the next couple of years could be extremely good for all the white goods AC companies as well as summer companies, any companies that were selling in summers. Because if you remember 2020 and 2021, we saw the pandemic at its peak during the summer season. So AC penetration is extremely low across India. That is also one of the reasons why this company should start doing well. We are seeing the effect of global warming, in which you will see higher altitudes, geographical locations here in India getting hampered with a lot of you can say heat, and there are heat waves even in the northern regions of India apart from south. So things are not that great on that front, and that's why ACs would be big in the coming years, and the next couple of years should be extremely good for Blue Star. It has corrected 26% from the top it made about a month and a half back of 1225. It is around 900, very attractively priced. The second in this list is Sequence Scientific. Now, this is a company that has fallen relentlessly from 330, although results have not been that bad. Results have been bad, and over the last 6 years, what we have seen is that their margins from around 16-17% has gone down appreciably to around 8%. That I agree with. But now with the new products in the pipeline, and they're working on operational efficiency, the company, hopefully the margins that we saw in the last quarter, the March quarter, could be the worst, and we could stabilize around here and move forward. The big issue for the company has been the Turkey business. They have around 12% stake in the business in Turkey, and that is going to hamper the numbers at least for the near term. But over the next 2 years, with the kind of selling that the company has seen, the stock has seen, and with the fact that the Carlyle have bought into the stake at around 86 rupees and the stock is around 95, I don't see a lot of downside from here on in, and I won't be surprised that over the next 18 months, by December of next year, you could see the stock double from here, and go towards the 180 200 levels. An emerging giant in the field of animal care and medications. It has very decent return ratios and you can say margins, but the margins are dipping. I agree with that. Carlyle taking over as promoter is a big positive. They have done a lot of changes at the top, with the CFOs and CEO changes and all. So hopefully going forward things should look good. I think FY23 should be much better than 22. So that's why I see more appreciation on the stock. Yes, we could see 80 70 levels if the market keeps falling, but over the next couple of years the stock could do extremely well. The third in my list is Jamna Auto. Now, auto companies and auto ancillaries have not fallen that much, and the reason for that is the whole sector has been under-owned for the last 2 3 years. Even when we have seen humongous rallies in other sectors like IT, pharma, etc., autos have been left behind. Even you can say economy related companies performed well or stocks performed well, but autos primarily did not do that well. But now we are seeing that auto companies are making new highs and staying there. So Jamna Auto, for instance, was at 120 about a month back and still is at around 105 106. It has not corrected a lot. It has corrected around 15 17%, but there are many companies from the top that have gone down 80% in the case of something like Sequent. There are companies that have gone down 50 to 60%, a lot of companies. So this is down only 15 20%. Looks very good. The numbers have been pretty decent in a very difficult environment. They primarily make tapered leaf and parabolic springs for CVs, and commercial vehicles are coming back into demand as construction activities begin to pick up here in India. Yes, we are seeing effects of higher interest rates, that real estate probably projects will get a little bit hampered, but government projects of roads etc. are going well. So I think CVs will be in demand, and the kind of uh, you can say products that the company sells directly caters to CVs. So the client includes Ashok Leyland, GM, M&M, etc. I think things should look better for them. M&M, with their reports have come out that they are setting up more factories and they have a lot of order book for themselves. So things are looking good for auto ancillaries, and many of them are still down 50 60% from the top. Jamna Auto, after making a top of 120 125, has gone down to 105 levels. I think around 100 would be a very good level to get into the stock. Fourth in the list is Acrisel, one of the fastest growing, you can say, home consumer play. It has a market cap of 1400 crores. Again, a stock that has corrected a lot from around 900 920 levels. It is now around 520 levels. So it has corrected something like 40 45% from the top. The market cap is now reduced to something like 1400 crores from around 23 2400 crores, and the sales of the company is around 400, I think 500 crores. So it is trading at under three times or just about three times sales, which is not extremely expensive, and is trading at around 20 times earnings, which is not bad either. So stock is very attractive now at around 500 levels. Again, a 2 year time horizon. Again, a stock that could easily double in the next couple of years with a kind of selling and you can say capitulation in many of the stocks, small cap stocks that are big brands, is taking place. I think they can easily double if things normalize or stabilize in the next coming weeks in the market. The fifth in this list is Birlasoft, one of the biggest IT, you can say mid-cap companies that have a lot of order book that are coming through. Provides digital solution, enterprise services, plus automation. It has presence in North America, US, Europe, Middle East, etc., and has come out with strong earnings. The best part here is the stock has corrected around 60%, 40 45% from the highs, and now is looking very attractive. I see a target of 500 550 on the stock in the next 18 months. So this is a video on the best small cap companies that you can probably buy in the next few weeks from a 2 year perspective. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thank you.